There will be a Q&A session at the end of this discussion. If you would like to participate, you can let the host know by either raising your hand or sending a message to the host via the chat window. Please note that only questions sent to the host will be passed on to the panelists. I will now
this opportunity to welcome our distinguished guest, Mr. Oscar Oyema, the Chief Executive Officer of the Nigerian Stock Exchange. Like you know, he doesn't need any introduction. Some people have even called him the Messiah for the Nigerian capital market. But while we're here, he's here to share his ideas on ways in which the Nigerian Stock Exchange plans to accelerate listing on the exchange. So I'll hand over the microphone to him.
Thank you very much, Chibundu. Let me start by thanking BGL PLC for inviting me to participate in the BGL Interactive Forum. My presentation today is on accelerating listings on the Nigerian Stock Exchange. I'll take you through the outline of the presentation. We will talk about the vision for the Nigerian Stock Exchange, positioning for the future, our current position as an exchange, and the initiatives we're putting in place to accelerate listings, and then we'll have a concluding session. The vision for the Nigerian Stock Exchange is to be the leading stock exchange in the African region for capital formation, driven by transparency, innovation, efficiency, and liquidity. In other words, we want to be the gateway to African markets. We've embarked on certain initiatives to position ourselves for the future. The very first thing, as you know, technology is a driver for innovation. So we are embarking on improving all of our processes so that we can introduce 21st century technology strategies. We're also looking to enhance our business development efforts by introducing a listings, sales, and retention area, product management group, and geographical distribution through our branch network. In order to make sure that we have investor confidence in our market, we are enhancing our regulatory programs. So strong regulation with supporting regulatory programs is key to our transformation program. We're also introducing first-rate investor protection strategies by enhancing the existing NSC Investor Protection Fund. And we'll be telling you more about that as we unfold that program. We've embarked on very ambitious market structure changes. This year, we're going to be introducing our market making program, our guidelines with regards to securities lending and rules on short selling, corporate buyback, so company buyback. We'll be also changing listings standards by introducing new quantitative listing standards. These are things that we're doing to position listings effort for the future. But let us start from where we are today. The current position is that we have about 247 securities listed on the market today. They're broken out as 200 companies, including 12 companies in our ASEM market, that is our alternative securities market, 25 federal government bonds, 9 state government bonds, most of them are infrastructure bonds, 10 corporate bonds, and 3 preference stocks. If you add the various market capitalizations, that brings our market capitalization as of today to $63.4 billion. So what are the initiatives we're undertaking in order to drive additional listings to the exchange? The first thing is to change our listings requirements, especially the quantitative listing standards, to allow us to be more flexible while maintaining our high standards, and also to allow us to be competitive in attracting companies to list on the stock exchange. I'm sure it's not news to you that many companies, including Nigerian companies, have a choice as to where they list. A number of our companies have chosen to list in other jurisdictions. And so we know that as a matter of being competitive and also best practices, that we need to introduce quantitative standards that are comparable to global exchanges around the world, and we're delivering that this year. Another initiative that we have embarked on is to provide value-added services. We believe that in order to ensure that our companies, our quoted companies, realize the value of listing, we need to provide these value-added services: corporate governance services, investor relations services, institutional services, analyst coverage services, and corporate access services. These services we're going to provide in collaboration with global leaders in these areas. So we would be looking to provide a menu of value-added services that our companies, our quoted companies, can choose from to enhance and enrich the listing experience. Another initiative we've embarked on is our market segmentation exercise. This exercise is geared towards consolidating the 33 industry classifications that we have today into 12 sectors on our daily official list. We are targeting a launch date of the first week of November to roll out this initiative, and it is geared towards a better reflection of global standards and international industry classifications such as GEAT, CIS, and NIAC standards. And what it will do is to provide input into investor education efforts regarding portfolio construction, asset allocation, and risk diversification. It will also promote the need for us to focus on certain sectors as we begin to actually understand better how our market capitalization is broken up. It will also facilitate foreign portfolio investments into the country as foreign portfolio managers begin to view industry classifications that they're familiar with in other jurisdictions. Another type of market segmentation that we've embarked on is market classification along market capitalization and along dividend payment policies. We are categorizing companies that are listed on our market into large cap, mid cap, and small cap. Large cap companies will be companies with a market capitalization above $1 billion. And mid cap companies will be companies with market capitalization between $150 million and $1 billion. And the small cap companies will be companies with less than $150 million. The dividend payout policy is divided along income stock and growth stocks. Income stocks will be securities with a dividend payout policy of 50% above earnings, and growth stocks would be less than 50%. Sectorial focus. We've created a listings, sales, and retention department for targeted business development efforts that prioritize key industry segments. As I mentioned earlier on, we're introducing 12 sectors, actually consolidating the 33 industry classifications that we have today into 12. When we did the analysis, we quickly realized that we need to focus on certain industry segments that drive the Nigerian economy. Agriculture accounts for 40% of our gross domestic product and only 0.3% of the market capitalization on the market. Oil and gas accounts for 16% of GDP, but only 4% of market capitalization. And that 4% really focuses on downstream oil and gas. So we don't really have upstream oil and gas listed in the market today. Power and the whole utility area generally accounts for about 8% of GDP and 0% of market capitalization. And then telecom accounts for 4.5% of GDP with over 80 million subscribers in GSM, in cell phone market alone, and only accounts for 0.7% of market capitalization on the exchange. So we believe that these are potential growth areas for the exchange, and we are driving quotation, we are focusing our quotation drives to these 4 segments while we continue to pursue listings in the 8 other categories. Another initiative the exchange has embarked on as a way to accelerate listings on the Nigerian Stock Exchange is the whole area of advocacy. We are advocating for our listed companies in public policy formation. We are collaborating very closely with government agencies such as the Central Bank of Nigeria, the Securities and Exchange Commission, the Federal Ministry of Finance, National Pension Commission, Debt Management Office, etc., in market development efforts. We've also renewed participation in the Financial Services Regulation Coordinating Committee, FSRCC, with myself and the very topmost levels of senior management participating directly in these meetings. As you know, we have about 13 branches in the country, and after strategizing, we've decided to really use these branches as our distribution network, both for quotation drives and for distributing new product initiatives, and finally helping us to reach out to the investing public. So investor education is one of the key areas where our branch networks actually come in handy. Last week, I was in Benin City, where I hosted the Edo State Governor to ring the opening bell on our trading floor in Benin City. We saw an uptick in market, in trading volumes and value from the Benin floor, and it was an opportunity to let investors know that they can actually participate in our market even from Benin and every other location where we have trading floors. So the branches help us to bring the market to the grassroots. We have a target of providing 5 products in 5 years. Today we offer the fixed income market, which includes federal government bonds, state government bonds, and local government bonds, and the corporate bonds and debentures. We also have equities market, which provides for listings and trading on the main board, which is our blue chip companies, and alternative securities market, which is our market for small and medium enterprises. We haven't reflected in the PowerPoint presentation, but we also have our Pripex market and our structured products market, all of them, boards, and all of them under the equities market. Our first new product that we're bringing to market in terms of the 5 products in 5 years vision is exchange traded fund product. We intend to launch our first ETF next month. It's going to be the gold ETF, which is, I guess it's called New Gold, and it's a product that is already in existence in South Africa, in Botswana, and we're hoping that we're going to be the 3rd country to launch New Gold with assets of over $2 billion under management. We intend to launch options both stock, bonds, and index options by 2013. And by 2016, we intend to introduce a futures market. There's already an active currency forward market in Nigeria. So we believe it will be easier for us to start with currencies and then quickly move on to interest rate futures. So in conclusion, we believe that the initiatives we've embarked on should position the exchange for attaining aspirational goal of reaching $1 trillion in market capitalization in 5 years. We believe that in the process, we will be providing a first-rate listing platform that promotes growth by accelerating capital formation while lowering the cost of borrowing, visibility by the inclusion of the quoted companies in both local and foreign indices and portfolios, transparency by providing greater visibility into quoted companies and into the trading on the floor of the exchange for greater public confidence. And as you all know, in order to be quoted on the exchange, you have to go through a rigorous process that makes sure that we are abiding by the various listings disciplines that we have in the market today. Continuity, a basis for survival beyond the company's founders. There are so many stories of companies that do very well when the founders are around, but without listing and providing for proper corporate governance, those companies quickly die off once the founder is no more around. Sustainability, by spreading risk of investments across multiple owners and participants, and therefore allowing people to actually invest in long-term projects and companies. There are many more reasons why we think the initiatives we embarked on are the right things to do, but I think I should stop here and allow other participants to chime in.
Right. Thank you very much for a wonderful presentation. For me, I'm quite impressed at the massive jump in which the members of the Nigerian Stock Exchange intend to take the market in the next 5 years, from $63 billion to $1 trillion. I think it's a huge leap. But before I start my own comments, I would like to give the floor to Mr. Victor Ogiamoye, the Managing Director of Partnership Investment PLC, for his own take on how we believe we can accelerate this thing.
Thank you very much for having me. I think from what Oscar has outlined, you see that it's a huge jump, like you said, but it's not really very difficult. I'll just take you through one very aspect, for instance. Our privatization. Privatization of government entities listed on the exchange will provide the kind of massive jump. One, when you do privatization, investors are very interested in it because they can see the companies working before now and hope that it will work. Everywhere that has been done, whether it's BT or whatever, there's been a very good response to it. In fact, if you look at today, the discussions around the fact that our privatization have been kind of done in a very bad way has come as a result of the fact that they have tried to avoid the markets. The markets will always work very well because no matter how you look at it, even if it was badly priced at the beginning, you are going to end up with the market repricing whatever, no matter how badly it was priced at the beginning. Over time, the market will reprice the security and people will be better for it. I think that is one rule that we need to really educate the government on and make it compulsory that every government entity to be privatized must find its roots through the stock exchange. This is not rocket science. This has been done in so many places. It's a very good way to be able to put inclusiveness into the process of privatizing these companies. We're talking about companies that if you put them there, and a few people take them as we've seen in the past, they just die natural deaths. But if you have more people participating in it, I can assure you that the confidence that the market needs will actually come from that. That is one route. I think that there's also some other things he has mentioned. For instance, he's looking at, sometimes one of the things that we've said is not flexible enough. I think he's trying to put that flexibility into it. There is no doubt that we need new products, because for years we've all talked about the depth of the market. Again, he has said that we are introducing new products, starting with ETFs. If you look at it, ETFs are being one of the most popular products today, around the world. And we are looking forward to the new listing. It says November, I believe. I think that will be a very good start. However, I also believe that one of the things that needs to be done before we accelerate this process is to also ensure that we carry the market along. We need a lot of education. In fact, for a long time, we've talked about investor education. Even, not just investor education, you need to educate those who participate in the market, whether as investors or as operators, because these are new times. We believe that if we do that, all these are things that will accelerate, listings in the market. And the truth is that it's just a question of success regarding success. If we start, like I said, from privatization, that is something that we can do with a low-hanging fruit that we can get today. There are still very many government enterprises that are not being privatized. But because of the way it's been done in the past, there's been a lot of criticism. We need to step in and educate government that this is the best way to do it. Because if you do it this way, you are going to make it inclusive, you are going to make it more transparent, and no matter how badly priced it is at the beginning, the market always finds a way to correct it. So I think these are the things that I would just contribute. I'll listen to you and maybe have a chance to add something to that. Thank you very much.
Thank you very much. Okay, for me, I believe that my biggest concern, generally, in terms of how best to accelerate listening in the market, is really the market absorption capacity. Most especially if we're looking at the jump that we're looking at, because if you take, for example, the size of the pension fund market today, which is roughly about 2 trillion naira, vis-a-vis the kind of jump. Because what it does is that it acts as a litmus test, just to give you an idea of the absorptive capacity of the market. It lets you know the kind of challenges that we'll have in terms of the growth. It's one of the things I would like Oscar to also address. Then the other thing, just to align with what you said, is also capacity building. Because one assumption that is being made is that the current operators, today actually have the technical skill, to be able to take the market in leaps and bounds. For me, I believe that the Nigerian Stock Exchange, just like what you said, have to work with the operators to ensure that the current capacity that we have, is ready for the kind of growth that we're about to see. Because the growth in percentage terms is huge. I haven't done calculations, but it's pretty significant. So for me, in planning on listening, because what we have seen is that if you look at figures for 2011, you find out that we've had limited listening, not because people don't want to list, but because they believe that the absorptive capacity of the market at this point in time is pretty low. So we need to be able to we need to be able to tie the absorptive capacity of the market vis-a-vis listening, because there's no way, if some guy has had his company unlisted for a long time and you are trying to encourage him to list, if the valuations are not right, he will not list. And for the valuations to be right, the market must have the capacity to absorb the security. Before I will take questions from the crowd, I don't know, Tam, if you have any contribution on this. Yeah.
Yes, I do. Thank you, Mr. Oyema, again. I think I'll start off. I think I'll start off with a couple of questions. I think the observations are quite correct, and I'm sure you will elaborate on some of these things. But I have 2 points. One actually on advocacy. You mentioned that you're going to use several channels for advocacy. What I'd like to know is if you can add a little more color on how you use those channels. There's been a lot of talk about tax breaks and incentives to encourage listing, and other regulation that will sort of push certain sectors that are underrepresented in the market to come to the market to list. The other area is around 5 products in 5 years. Now that's good work with exchange traded funds, and we want to see derivatives in the market. But I think there's some sanity really if you come to think about derivatives. I would imagine futures will come before options because they're easier to price. And then in terms of sanity, usually the build-up usually starts from the OTC markets. I don't know how the stock exchange hopes to work with OTC markets, especially the new one that's been proposed by the NASD, to effect these new products, especially around derivatives. Thank you.
Well, I think I'll just allow you to address those before we take more questions, so that at least you don't lose your train of thought.
Okay. Thank you very much for the thought-provoking questions. The first one is from Chibudu with regards to the absorbing capacity of the Nigerian market. So we're looking at supply and demand when we talk about liquidity and debt in the market. Nigeria is a country of 158 million people, with the majority of them under 30. So we are talking about a growth type of nation with potential for a large proportion of that population working or engaged in some productive activity. The GDP for Nigeria on a purchasing power basis last year, according to the CIA report on Nigeria, was $378 billion. Nigeria is growing at 7% annually. So if you grow that 378 billion out 5 years, it's going to be about 560 billion. So at 1 trillion in 5 years, we're actually 176% of the GDP, which is nothing to write home about if you look at other well-developed markets. So that's the first thing to bear in mind. The second thing to bear in mind is that this GDP that I've talked about, like I showed you in just the 4 sectors, they're not reflected in the market today. So to Victor's point about privatization, if the government changes 1 or 2 things about their privatization program today, whereas a company gets sold to strategic investors, it gets listed right away. That is a much better model because the market imposes certain disciplines, it imposes transparency.
By listing rules, a certain percentage needs to be sold to the public.
Yes, you said by my listing rules, a certain percentage needs to be sold to the public.
Yeah.
Today, let's take power for example. There are 16 power companies that have been formed. 11 of them are distribution companies that are going to come to market. The government is retaining between 20 to 25% of each of those companies with a view to bringing them to market within 3 years. Those numbers will meet our listing qualifications, especially our new quantitative standards. So that shouldn't be a problem. What is a problem is waiting 3 years. They should bring it in right away. The pricing, where else can you get a better pricing than in the open market? The transparency, the corporate governance that the market imposes, because we've had instances where you've had privatization, where the strategies just ran down the company. Sure. Because in most of these transactions, the purchasing price is actually lower than the market price. So with regards to the absorbing capacity, I believe that this country has a lot to absorb. And I should also point out that a company that is a good company is going to get sold at the right valuation. it doesn't matter what market sentiments are today. MTN, for example, decides to come to market, as large as they are, they'll be sold. They'll be sold in this country, and in fact, there's a lot of foreign interest in our capital markets, and a lot of these foreign portfolio managers will also bring a lot on the table with regards to the buy side. So sometimes in order to drive the buy side or the demand side, you need to inject the supply side to it. So the quality of companies that we have on our list, we really want to enhance, and we think that would drive the demand side. The question with regards to advocacy, we are embarking on advocacy for the different constituents that we interact with, not just quoted companies. So, for example, on the broker-dealer side, we've been advocating for the AMCON, AMCON forbearance on the margin debt overhang. We've written several letters to AMCON, to CBN, to Federal Ministry of Finance, and we've paid visits, we've made the case. And we believe we can do a similar thing for quoted companies. If there are common issues that our quoted companies are grappling with, or segments of our quoted companies are grappling with, we believe that we can collate and articulate the position and then advocate on their behalf with policymakers to try to help to influence policy, because we do recognize the pivotal role that the Nigerian Stock Exchange plays in the Nigerian economy. The last part has to do with how the stock exchange can collaborate with the OTC market in bringing on derivatives products. We chose options first because of technology, because we also have certain products existing already in the sense that we have bonds and equities that we can quickly create options on, and that we can also create options on the indices that we have. So that is actually, in our mind, an easier way to go than with futures, where you really need a forward market to be vibrant, and then you just standardize the contracts and put them on a central market. So it remains to be seen, but from a purely technology perspective, from a purely product perspective, given what we have in the market today, we made the determination that options was an easier way to go than futures.
Okay. I asked a question on building capacity for operators.
Capacity for operators. We've developed a new training unit which has its hands full. We have so many programs lined up. Yesterday we were having two training sessions for our broker-dealer community on the new exchange-traded fund product. We had people from AFSA Gold in South Africa come down to run this program. We are laying down plans around our first investor clinic that should happen either in November or December. Again, the training unit is driving this effort. There are so many other programs that our training unit is introducing to drive capacity building, not only at the operator level, but at the investor level and at the policy maker level. We believe that it's important that the policymakers understand the capital markets, understand how it works, so that when they create policy, it's actually policy that makes sense.
Interesting. Victor had a point. Right?
Well, I'll just add to the question you asked about absorbing capacity. I think that's a question that's always been asked. I remember, I'm sure you are aware of that. I remember when some time ago, the BP, when they were trying to start their privatization program, your company BGL and the partnership were asked to look at the possibility of what is the absorbing capacity. That was basically the question. And we came back independently confirming to them that we believe that the market was right and it was ready for it. And we have since proven that when with the consolidation of banks, nobody ever thought that this market will raise the amount of billions that was raised to support the, the banking system in the first consolidation effort. I think we have to be very clear that if you look at what has happened in the past, even with what happened in the private credit market, is enough evidence to show that there's appetite for it there. So the demand is there. And on the other side of the equation is the pension funds. Now, you're talking about the money is just going to keep coming. We have, you and I know that the pension industry only just started about 3 years ago. So it has not even matured. So we have room. So on both sides, both the funding side and the product side, which we must catch up with, because there's actually a crisis now in the pension industry. In fact, that they have money, they have no outlets for their investments. So I think it is the right thing to do. I think that we'll cover this gap when the time comes. Okay?
All right, thank you. Well, we have an avalanche of questions online, so I think it's only fair that we allow Antoinette come in and read us some of the questions from out there. Antoinette, can you hear us?
Okay. The first question we have here is, as part of the market-making activities, there must be security lending. However, since 2008, when the first of market makers were licensed, we have not seen any regulations on rules to security lending. What plans does the NSE, or do the NSE and the SEC have for security lending?
Okay, do you want to take like 3 questions, Antoinette?
Excuse me?
Maybe an additional 2 questions.
Okay then.
Yeah.
All right.
Okay.
We have another question here from Item Dilim Isia Bona. Our question is, our market is said to be 70% foreign dominated. Is NFT doing anything to protect local investors as well as listed companies from foreign investors who create selling panic and exit the market at prices favorable just because they know that capital gains tax is 0? And finally, another question from Adebayo Durodola. How do you intend to convince big firms like MTN, Wamco, Etisalat, Glo, etc. to list their shares on the exchange, considering that they could be better valued than the current OTC pricing, as well as deepen the market?
Okay, thank you very much.
So those are 3 questions.
Okay, thank you. Oscar is smiling.
Because he has all the answers.
Well, thank you very much for those questions. The first one is with regards to market making, securities lending, and I'll add another one, short selling. The market making program that was introduced by the Securities and Exchange Commission some years ago did not really take off because we don't have market makers making markets today. We looked at it, when I say we, I mean the Nigerian Stock Exchange, and decided to come up with a program that is radically different from the existing market making program. We've since shared this with the SEC and discussed with them, and they agree with our program, and indeed have been very cooperative in moving forward our program. Our program basically allows for any broker-dealer to apply for a market making license, not really a license, but the exchange will appoint market makers. And the exchange will look at certain criteria, which will be making public to everybody shortly, to make those appointments. Market makers will have certain obligations and certain benefits for being market makers. For example, to be a market maker, we require you to hold yourself out as making a 2-sided market. Now, the market that you're making, you don't have to be there 100% of the time. depending on the security, you may be required to be there over 90% of the time, and for securities that are very liquid, that don't really need market makers, a smaller proportion of the time. Showing your own size, leaning on the market, whether on the buy side or the sell side, as long as you are the national best bid and offer a minimum amount of time. Those are requirements, and there are several other requirements. And then on the benefit side, if you meet certain volume and value thresholds, you receive certain rebates. You're right, market making goes hand in hand with securities lending. There's been a concerted effort in the industry to work out guidelines and rules around securities lending that will be functional. We've collaborated with the SEC, the CBN, AMCON, the ASHON, and other industry bodies, as well as CSCS, to come up with guidelines around securities lending. And so when we introduce our market making program, it will come with securities lending and short selling. Short selling occurs when you borrow a security and then you sell it in the market, anticipating that prices will fall so that you can buy it back and lock in the profit. It's speculative, but it actually does certain things. It provides for trading activity where there would have been none. So today, you don't have short selling, and so people that have a view on the valuation of a company, a negative view, are not able to act on that view. Securities lending introduces efficiencies into the market, especially for people that have securities that they're not willing to trade. They can generate additional income by lending the securities out. So yes, we agree that all of them go hand in hand, and our program that we're launching this year, by the way, anticipates that all three initiatives will come on board at about the same time. The other question was around 70% foreign dominated market and what we're doing to protect the local investors. I have to say that it is highly unlikely that foreign investors create rumors to create panic and then run out of the market. What I'm basing that on is that the fact that 70% of the market is driven by foreign investors means that foreign investors are the ones staying to play in this market. It's a tough environment right now. We would not deny that. And so we continue to go out there to educate local investors and to actually also talk with local institutional investors, not just retail investors. On the retail investor side, I think it's critical, the idea around portfolio construction, asset allocation, and diversification. I think we did not really understand risk management as retail investors when we all decided to go into banking stocks. So what is the exchange doing? We're coming up with investor clinics where we would have broker dealers come in with their top retail investors and talk to them about portfolio diversification, asset allocation, and work with them to properly structure their portfolios to take into account risk. The last question has to do with how do we convince MTN and WAPCO and other major firms to list on the exchange? I think the first thing, the first step towards getting them to list on the exchange is to create a credible exchange that has the right policies and procedures, the right rules, the right regulatory programs, and the right technology. That's the first step. The second step is then to say, okay, we have flexible listing standards that are global, that meet global best practices. We have value-added services to support various things that you're doing. And one of the things I've just talked about is advocacy. So to the extent, you talk about price breaks, tax breaks, and things like that. To the extent that we can advocate for those positions, we will, and we are already doing that. So the idea is to make sure that we remove any impediment for a large corporate or any other corporate for that matter that wants to list. At the end of the day, the listing decision is a strategic decision and a branding decision that has to be driven by the company itself.
Thank you. Before you hand over the mic to me, just a quick clarification. Is the market, is it 70% foreign investment in terms of market turnover or in terms of market capitalization?
I believe that it is 70% of the 25% that you can have, so it is market turnover.
All right. At this point, I hear the questions from the crowd, so we'll just take questions.
I want to appreciate the courage of the Nigerian Stock Exchange to move the market forward. And as operator in the market, we are going to cooperate with you to ensure that the market goes forward. However, I think there are some monsters facing the market that need to be pulled down or addressed to make the market move forward. One, we know that 60% of the quoted companies today are not doing well and they are not paying dividends, and as a result, investors are discouraged, and so people don't want to come to the market. Two, the nationalism of banks, Spring Bank, Afribank, Bank PHB, the shareholders, no provision for the shareholders, and these people, as you go out to market them, nobody wants to listen to you. Even the other rescue banks, Union Bank, Oceanic Bank, Intercontinental Bank, the retention ratio does not favor the existing shareholders, and they are also distribution. More than that is the C2 market, less competitive, and so many people, as you go to the market, they don't want to listen to you because other alternative investments are considered better than investing in the market, and these are the realities that we are facing. And I want to start to address this critically, and so that we'll be able to advise our client accordingly. Thank you, sir.
Just
So, market makers, they need liquidity providers to function effectively. Now, we have been talking about security lending, which is going to affect the way they settle securities when they shall sell. Now, they need liquidity provider if they are buying, if they are acting on the demand side. So the question is, how is the exchange working with CBN? Right now, banks are not lending, and they are not even ready. They don't want to listen to anything in the stock market. So how is the exchange working with CBN to encourage banks to support local dealers in this market making exercise? Thank you.
For agriculture, telecoms, petroleum, and power, I was wondering if there's any plan to look at real estate, given the fact that the way to go for real estate in many jurisdictions is to unitize products, create unitized products that will serve the market. And with our teeming population, it's a no-brainer to look in the area of real estate. The second question, to be able to draw in additional participation from the publics, there's a need to look at other technologies that will facilitate access to the market, both whether you're looking at using the telecoms platform. What is the level of preparedness of the exchange if they're indeed thinking in this regard?
the second question.
Basically, I'm talking about mobile money, to leverage those technologies to draw in more participation from the public, particularly as we have over 80 million subscribers, as you put it.
Thank you. Thank you very much for the questions. The first one has to do with 60% of the quoted companies not doing well and not paying dividends. Let me focus on the dividend part of it. Nigeria has some of the highest dividend yields in the world, and I've been asking myself, why is it so? And I think it is the abnormal demand for dividends, so that even companies that have announced that their dividend policy is that they're paying zero dividend because they want to be a growth company, get penalized for that. I think that thinking is flawed. A company that has a dividend policy that they will pay dividends but are not able to meet that policy should be penalized, not a company that decided that they want to reinvest all their earnings. Just because a company chooses not to pay dividends doesn't mean that that company is not doing well. A company that is showing losses is not doing well. And there are quite a number of companies that are showing losses, but the exchange, at least our rules as they are today, does not require us to delist a company just because they have losses on their books. It's possible that you could have 1 or 2 bad years and then turn around, or even longer. But what are we doing? I think your question really is, what are we doing to clean up the companies on our list so that we have viable companies on the list? We're doing a critical review of the companies on the list. We want to make sure, we're not really interested in the number of companies we list. We want to make sure that we have quality companies that are listed. So that a situation today where PFAs, just from the guidelines that PENCOM has, can only look at 60 of our companies, and most of them invest in 30 of them, is not acceptable. We really need, we have 200 plus companies. We need to make sure that a majority of those companies meet the requirements for PFAs to invest in. On the flip side, we also need to go to PENCOM and say some of your requirements are too stringent, right? You can't force companies to pay dividends on a continuous basis in order to meet your requirements. So some companies go out and borrow money to pay dividends. That is not good corporate practice. So it really, it's on both sides. Us making sure we have quality companies, but policymakers making sure that their policies are flexible while maintaining global standards. The next one is the nationalization of banks. There's no question that the nationalization of banks had a negative impact on the market. We lost a lot of market capitalization because of that. But if you're looking, but that was in the short term, in the short run. In the long run, we think that it brought certainty and closure to the banking crisis. And the market does not like uncertainty. So we think that if things continue the way they've been progressing, that we should see a banking sector that is more healthy, and that should reflect in the banking index. We also note that we read in the press that AMCON said that the federal government was going to be compensating some of the shareholders of nationalized banks. I don't know whether this is true, but if it is a welcome development. Market making, the next question has to do with NPR, CBN NPR increases. In a rising interest rate environment, it is really tough when you also have a falling equity market to convince people to stay in equities. And that is why we are rushing to bring good quality products to market that would allow you to diversify away from equities but still remain in the market. So for example, the new gold ETF allows you to go into gold while trading the ETF as if you're trading an equity. So you're still in the market, but you're now holding gold. And there are several other products like that that will be coming to market after we launch the first one. So we have no immediate control over what the CBN does with regards to NPR, but at least we can react to it appropriately, and that's what we're doing. With regards to the need for market makers to have liquidity providers, I'm going to answer it in two ways. I thought market makers were liquidity providers. And then the second way I would answer it is, yes, the CBN has prudential guidelines around banks limiting the exposure to broker-dealers in terms of their loan portfolio.
Equities, actually.
Equities, 10%.
Yeah.
So we intend to go to the CBN and say, after going through a rigorous process for selecting 10 market makers, can you carve out something for our 10 market makers because they've met some of the criteria? So I think those are the two answers to your question. And then the next one has to do with real estate. What is the exchange doing with regards to providing structures that will allow you to trade real estate on the market? When I said we're focusing on 4 sectors, I also was careful to say that we are going to continue to drive activity in all the other 8 sectors. But these 4 are really egregious. They're very, very clear that we need to do something drastic about them. With regards to real estate, there are 2 things we're doing in this area. The first one is to support the introduction of REITs. I was at the Asset-Backed Securities Conference speaking about that construct. And then the second part of it is the introduction of ETFs. You can introduce ETFs around real estate. And in fact, there are exotic ETFs that are called leveraged ETFs that track real estate, so that the real estate index, if it returns 1%, for example, the ETF goes up 2%, or goes down 3% because you also have the inverse leverage ETFs. So the beauty of ETFs is you trade them like equities, but it gives you exposure to a lot of securities, including real estate. So it's something that we're looking at, and we'll continue to try to develop. Mobile money. We are excited about what happened with M-Pesa in Kenya, and we are very hopeful that Nigeria will even have a bigger success. That market, we have products around it now, but it's something that we'll continue to look at, and as it develops, we'll see areas where we can leverage the product to bring new products to the Nigerian market.
Okay, sorry, I just wanted to add to her question, because I don't think it's mobile money from the perspective of just mobile money. It's in terms of almost a paperless process for accessing the market. So from that, so what that means in essence is, can I buy and sell and get paid, with little or no documentation, because we have PIN numbers on cards, we have SIM cards, so how can that be possible?
Luckily, I have my executive director for market operations and technology here, Mr. Adebajamo. So I would ask him to answer this one.
Thank you very much. The CEO mentioned earlier about our investment in technology and bringing technology to the 21st century capabilities. The first part of that is actually our trading engine and trading platform. And if we just look at technology for technology's sake, we missed it. So the game is actually looking at enhancing the customer experience in the Nigerian market. And that enhancement has to come in phases. So the trading engine is, if you like, phase 1, where you have the core capability to actually say, now we can link in a more automated fashion. Yeah, either from operators or participants. Yeah, so that's part 1. Then part 2 of it then starts going to say, you know what, I should be able to trade from anywhere. I should be able to get confirmations through my trading. I should be able to do my clearing and settlements in an automated way. I should be able to reduce my overall cost. So that would then go into your phase 2. Then logically by extension, yeah, if you look at the way access to the internet is developing, certainly in a market like Nigeria, it is clear to see that it's not going to be the PC alone. Yeah, the mobile devices will play an increasing part. So we're not going to ignore that market. Yeah, there are some challenges around that market. There's security, there's all sorts of things there. So we're not going to rush around but it's something we're actively looking at and will actually enhance the services around it as a product.
But
Thank you.
let me just add